Global uncertainty just went vertical. Debt levels are at historic highs, trade tensions are escalating, AI is disrupting entire industries in real time, and major powers are openly preparing for a more fragmented world. Right now, it's harder to tell whether we're heading for a crash, a melt-up, World War III, a technological revolution, or all of it all at once. Ray Dalio just released a viral piece declaring the post-1945 world order officially broken. He says we're in stage 6 of the big cycle, the dangerous stage. If Dalio's right, this isn't just volatility, it's a transition. And in a transition, the real question isn't about price, it's about money itself. Because in moments like this, the assets that matter aren't the ones that move the fastest, they're the ones built to survive the reset. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host Hurley, now let's get into it. Ray Dalio dropped a long-form article on X over the weekend, and it's gone viral for a reason. He lays it out plainly. The post-1945 world order, the US-led dollar system, is no longer stable. In his framework, we are in stage 6 of the long-term debt cycle. Debt levels have compounded for decades. Interest costs are crowding out productive spending, wealth gaps are wider than they've ever been, internal political cohesion is weakening, and externally, a rival power is rising. Historically, that combination produces massive instability, not because of ideology, but because of math. When debt service rises faster than productivity, something has to give. You can either let rates rise and force deflation, or print and continue to debase. Both paths destroy wealth, just in different ways. Dalio also outlines 5 forms of conflict that emerge in these transitions: trade wars, technology wars, capital wars, geopolitical wars, and eventually military wars. Before bullets, there are sanctions. Before tanks, there are tariffs. Before hot war, there is capital weaponization. And all of this sounds eerily familiar because we're already here right now. Layer this with something we've talked about on this show before, Triffin's dilemma. Simply put, when a currency is the global reserve currency, you must supply the world with dollars. How do you supply the world with dollars? You run persistent trade deficits. You export your currency. But over time, that erodes domestic industry and political cohesion. So the very thing that makes you globally dominant weakens you internally. That's the trap the US finds itself in today. It worked when the US was 40% of global GDP after World War II. But it's harder when the world is multipolar again. And that pressure is rising. Lyn Alden was on Bankless, and she framed this not just as a debt cycle, but as a broader institutional cycle.
I think we are basically in the fourth turning, which I'm not the first person to say that, but the way I break that a little differently, because I look at things a little bit more quantitatively, which is to say we're on the rough side of the long-term debt cycle. And with a long-term debt cycle tends to come other things along with it, which is why I always feel like everything's happening all at once. So sovereign debt crises tend to lead to more war, and war also can lead to sovereign debt crises. So these things kind of feed off each other. It also tends to lead to you have decades of debt building up, and then you usually have debt like decades of like laws building up and like this entropy in the system. And there's usually some sort of clearing event that happens, which can be a pretty dangerous or challenging time because the shields are down for all the norms that people are used to. There's also an institutional cycle that goes along with that, which is to say many of the institutions that are put in place by one generation and last for 75 or 100 years or more in their form, they're no longer in kind of the built for the technological era that we're in anymore. They're no longer built by the same people that are alive anymore in most cases. Trust in them is generally broken down. Things have moved on, but there's this kind of transitional period. And these all tend to feed on itself, especially when you're going through that longer term debt cycle. And this time, compared to prior historical things, we can add demographics issues. Like for the first time ever, you just got like future generations that are smaller than prior ones as far as the eye can see, at least any sort of forecastable time horizon. Social media, of course, adds chaos. Like instead of happening at the rate of newspapers and TV, it happens at the rate of like real-time peer-to-peer communications. So you can meme about the downfall of empires in real time. And so I think that's why it generally feels like everything happening all at once. Obviously, what you should focus on is more like what's in your wheelhouse to do anything about. So I think to some degree, basically as people, we have to have some degree of broad awareness, ideally, of multiple things. But you generally want to have like your 80% focus, I'd say, on things that are in your either area of expertise, things that affect your employment, your business, your family, your hobbies and interests. That's where I think people should be focusing. Now, that will include like AI for a lot of things. That'll include macro for a decent chunk of things. And then it goes less from there as you get into kind of the long tail of other issues where they might be very important issues, but there's very little that a given person can do about them or that those things will directly affect them that they can prevent in some way. So but it depends on where they live in the world. I'm generally talking to kind of a Western audience here on average, but it obviously depends where you live. So we certainly do live in crazy times, and a lot of this is quantifiably crazy.
When Lyn says the shields are down, she's describing something profound. The institutions built 75 to 100 years ago are no longer built for the technological era we're in. Trust erodes, norms weaken, demographics invert, social media accelerates chaos, and AI compresses time. So the question becomes, in this unique environment, what kind of money survives? Us Bitcoiners argue that it's not the one dependent on trust, and it's not the one dependent on policy discretion. It's the one dependent on math. So if this really is a transition to a multipolar world, then the reserve system itself has to adapt. And that's exactly where Lyn takes this next.
I do think the more multipolar side wins, which is more of the China side, like the more that they get some degree of kind of dollar independence and neutral reserve assets like gold get elevated. But that's not even necessarily bad for the US. It goes back to my prior point around Triffin's dilemma and things like that. It depends how the US plays its cards while this is happening. And I've read a couple pieces on this. One was back in 2020. I talked about the rise of this kind of multipolar world happening. And then, of course, I featured it in Broken Money in 2023, this kind of shift toward a more multipolar world. And I can't say exactly what's going to happen, but there's a couple options you can lay out. So one kind of point there is that there's really no currency in the world, including the dollar, like let's say no fiat currency in the world, including the dollar, that's big enough to serve the whole world anymore. So when this dollar system was established, the US was over 40% of global GDP. We were the only thing standing after World War II. And we had all the gold, we had all the manufacturing, we had 40% of global GDP. We could run the ledger. Over decades, Triffin dilemma has poisoned that well to some degree. In addition, China, India, Europe, they've recovered from the whole period of colonialism that happened, the whole period of total war that happened. We've gotten closer to historical GDP ratios where these big population centers are rising back to their kind of normal place as pretty big economic powers. And there's really just no currency block big enough to solve the whole world without Triffin dilemma being a really big deal. So even China's not big enough. The US isn't really big enough. And so that means you generally need one of two things. Either you need diversification. So maybe you have two really big hubs. You have the US and China has two really big hubs. Maybe Europe is its own third smaller hub. And so no ledger's trying to serve the whole world. The challenge there is that money has network effects. It tries to trend toward one, but liquidity begets more liquidity, and it just puts pressure on that diversified model to some degree. And then the other option, the part that kind of alleviates that, is neutral reserve assets. So you can have a diversifying of the ledgers, but then also these neutral things that bridge them. Gold being the incumbent neutral reserve assets, the obvious first choice is the one that central banks already hold. It's the one that almost everybody in the world can understand to some degree. It's got this multi-thousand-year track record, with the main caveat being that it's really slow and expensive to audit. So it's great as savings. It's not great as settlement. Like when Germany wanted to repatriate part of its gold, it took years. And they finished ahead of schedule, and it took years. It just took fewer years than they thought. Whereas like, a Bitcoin transaction, you could get 6 confirmations in an hour on average. And it's just like a different world. Now, Bitcoin it's a settlement rails and it's a store of value. It's got 17 years of track record now, but it's, we're talking, depending on if you're in a bull or bear market at the moment, it's a $1 to $2 trillion asset. So it's still small on the network effect scope. It's still, even though it's got reasonable liquidity, it's still pretty small on the liquidity spectrum. And then sometimes there are people that just don't understand it. There are people that are say, is it prone to risk XYZ, let's say quantum, for example, in a 5, 10, 15, 20-year time horizon, which sovereigns are going to think in. So I think that's a rising contender, but I think this is a very long game. And it really not until, Bitcoin has an extra zero on it, would it, like its market cap, would it be like a contender at the scales of dollars and Chinese currency and gold?
Central banks are buying gold at record levels. Why? Because in a fragmented world, neutrality matters. Gold is neutral, but gold is also slow. It's hard to audit, hard to move, and impossible to settle instantly in large quantities. Bitcoin solves that. It's absolute scarcity enforced by code. Settlement in minutes. Auditability in real time, with zero counterparty and no permission. And this isn't just theoretical. If you zoom out, even with this 40% drop from the all-time highs, Bitcoin keeps compounding inside its channel. Looking at this chart, it's hard to argue against the idea that Bitcoin has been in a 17-year-long bull run. Because it's monetizing, slowly, systematically, underneath all the noise. If this is a structural transition, then reacting to headlines isn't a strategy. Building correctly is. And that's why Swan Private exists. Swan Private is built for families, individuals, and businesses who understand Bitcoin is a long-term monetary asset. As a member of Swan Private, you get a dedicated Swan Private Wealth representative, which is a real person you can text or call anytime, that can help you build a Bitcoin wealth strategy based on secure custody, inheritance planning, and tax-aware structuring. If you're serious about holding Bitcoin through structural change, Swan Private is built for this moment. Visit swan.com/nosecondbest to learn more. One of the charts in Dalio's piece shows something sobering. Long peace periods followed by sharp conflict spikes. Transitions are uncomfortable. Volatility is normal, but remember the distinction. Bitcoin is volatile in the short term. The legacy system is fragile in the long term. Those are not the same thing. Uncertainty is at extremes, debt levels are stretched, institutions are under visible strain, and countries are already adjusting, quietly diversifying reserves and repositioning for a more fragmented world. Gold is responding to that shift, and Bitcoin is still early in that process. Dalio is describing a world where power matters more than rules. Lyn is describing a world where no single currency is large enough to anchor the system. Capital itself is being weaponized, and trade relationships are being restructured in real time. Put all of this together, and the pattern becomes clearer. Bitcoin doesn't have to dominate this world right now. It doesn't need to replace everything. It just needs to continue to exist, outside the control of any single nation, bloc, or political cycle. Neutral, scarce, and increasingly relevant. So Dalio argues that the rising power to replace the dollar system is China, but I argue that rising power is actually Bitcoin. But now I want to hear what you think. Do you believe the dollar system adapts or fractures? In a multipolar world, what asset do you want settling value between blocks? Drop your thoughts in the comments below. And if you got value out of this, please like the video and consider sharing it with someone who needs to see the bigger picture unfolding. And don't forget to subscribe to the Swan Bitcoin channel if you're not already, so you don't miss the next one. So the world order may be changing, but monetary physics hasn't. And in the game of money, there is no second best. Thanks for watching, and I'll catch you in the next one.